Good morning, everybody. Hey, it is John Lone King, and it is Friday, the 19th of September. We are literally 2 days past the big Fed meeting that we have been looking at for the last 45 days. And man, has there been a lot of news happening in the last 48 hours. So let's dive right in and tell you what's going on. So first and foremost, I'm going to rewind to my prediction I made on the first Friday of August. And I said rates are on sale for 45 days. And that sale is likely to end the day the Fed meets, which was September 17th. Guess what? I hate to say it, but I was right. Okay. I was taught a long time ago, don't rub it in that you're right because it doesn't help you. And in this case, it didn't help us that I was right, but definitely what I was afraid of is happening. The question is, where is this going to go from here? So let's talk about it and kind of break it down. So first of all, the Fed met on Tuesday and Wednesday. It was a different Fed as far as the feeling within the room. There was a great article that the Wall Street Journal put out on Tuesday night, Nick Tiramos, and he talked about what's happening within the Fed and how there's a lot of fighting going on right now. We had two Fed presidents back in July that said, I don't agree with us keeping rates steady. I want to see rates cut by 0.25%. That's the first time in, I think, 30 years that we had two of the people on the Federal Reserve Board that voted against the majority. So that was a huge sign that there was some turmoil. We talked about that already. Well, guess what? At this meeting, we had a third wild card, which is the newest Fed president or newest member of the Fed governor, which is Stephen Miran. And Stephen Miran comes in and he becomes the only one that said, I want to see a 0.5% rate drop. Everybody else said a 0.25% rate drop. And this article in the Wall Street Journal said he'd be surprised if more people dissented or disagreed. And here's why. Because if you disagree with the rest of the group, you don't get to be involved in writing the press release. And the guy who wrote the Wall Street Journal article, I really like him. He said, look, it right now is really important for these people that disagree with Powell to have a voice in the press release. And so the new guy that's Trump's right-hand man, he voted against it. But the two people that back in August or July that wanted to see lower interest rates, they said, yeah, we agree. 0.25% is fine. And that surprised a lot of people. Why in the world would they agree when they should have pushed for 0.5%? Because I think they wanted to be involved in writing that press release that was released at 11 o'clock on Wednesday afternoon. Now, 11 o'clock Wednesday morning. Here's why all this matters. The drama is really exciting. You may not care. Like, John, get to the point. The point is mortgage rates got better when that press release came out because the press release showed what's called the dot plot, which is the number of rate drops that the Federal Reserve Board is expecting over the next 2 years. And it showed a bigger rate decrease than what we had expected, and the mortgage market and the bond market responded very favorably to that. And then Powell comes to the podium 30 minutes later, and he poured cold water on everything, okay? So we had deja vu of last year. Powell comes out just like last September and says, whoa, hold on, time out, gang. Don't pay too much attention to the dot plot. That's just everybody's guess, but that doesn't chart our course. That's not actually what we're going to do. Now, that is a true statement. The dot plot is just a projection, but never recently have we had a Fed president come out, chairman of the Federal Reserve Board, and say, hey, disregard what we just put in writing because we're probably not going to follow that. And the market started getting nervous. I personally think it's Powell who's trying to shift the narrative. Powell's in a lose-lose situation. I've said it already. He's what I would call a lame duck. In other words, a president in the last few months of his presidency is a lame duck. They don't hold any power. Well, Powell's time is about up. He's got President Trump pushing hard on him to lower interest rates, and he doesn't want to see us caving to Trump. Otherwise, the Fed is not considered to be independent, and instead the Fed would be considered to be acting on the whim of the president. And Powell does not want that. But that means that Powell has to actually fight the opposite direction. It's like a tug of war, and the harder one person pulls on one side, the harder you have to pull on your side. And so the markets are undulating and reacting, and we've seen interest rates go up by 0.25% in the last 2 days. That's huge, okay? So we saw a huge spike for a few different reasons. There was a strong retail sales report that came out on Wednesday morning. And that retail sales report said, hey, people are spending money. Everything is good. Well, that means that job growth should continue to go up. And then yesterday, the new claims for unemployment were lower than they had been the previous week. So the whole thing right now rests on unemployment. This is all going to come down to what do the unemployment numbers look like? Every single week, we get an unemployment report. Every month, we get the more important report that comes from the Bureau of Labor and Statistics. And so that monthly report is coming out in 2 weeks. When that report comes out, we're going to see movement in interest rates. Now, here's the sad thing. The sad thing is that Powell reset expectations. So let me give you a brief history lesson. We were increasing the number of jobs in the United States by somewhere between 150 and 250,000 jobs created per month. And that's what it's been for the last few years. And then come the report that came out on August 1st of this year. And it said, hey, in May and June, we think that actually there were a lot fewer jobs created. And in July, there were fewer jobs created. And we were more, especially with the September report that just came out, there were more let me rephrase that. The reports have said that there was around 75 to 80,000 jobs created per month over the last 6 months, significantly lower than before. And that's exactly what's leading to the mortgage rates getting better, because we're saying, hey, inflation isn't really as big of a problem anymore. And jobs is a bigger problem. We're creating fewer jobs. And that has led interest rates to fall. Well, Powell said, well, you know what? In this environment, I think that 0 jobs created to maybe 50,000 jobs created, that's probably enough. He just reset expectations. It's kind of like saying to your kid, hey, I expect you to get an A. I expect you to get an A. And then the kid comes back with a C and you're like, hey, well, as long as you don't get a D, it's good enough. You've reset your expectations because you want the outcome you want. You want your kid to be recognized as performing. And so you lower the bar by saying, oh, well, I didn't really count on an A. I counted on something better than a D. And you've got it. You got a C. So Powell is lowering the bar. He's saying, we don't really need to create any jobs and we'll still have a great economy. I'm sorry, but you're rewriting the rule book and saying what is considered a good economy. And that's actually going to hurt mortgage rates trajectory of going down. Okay. Now, he also said that we have, we can explain why the jobs have been lower because we have less jobs available, but we also have less immigrants that are still in the country. People who have come in, whether they're legally here or illegally here. A lot of them have left the country by their choice or not. And so we have fewer people to work and we have fewer jobs available. So, hey, that's no big deal, he says. Well, okay, except that the number of jobs keeps dropping and the number of people in the country is not going to keep dropping. And so that's what's happening right now is we're hitting a tipping point that we're starting to lose jobs. And I'm seeing it in my clients. I'm seeing it in the stories as I'm talking to my clients and seeing people firsthand who are losing their job. Now, I hope this doesn't continue to go down this road, but what we've got basically the Federal Reserve resetting the rules and saying what is considered a good job market and saying, it's okay if we don't create any jobs. Why? Well, because recently we've barely been creating any. So let's tell the world, let's tell everybody in the economy, it's no big deal if we only create 1 job in the entire United States in an entire month. That's ludicrous, but that's what we're dealing with. And so those statements that Powell made poured cold water on the rate decrease that we have been seeing. Now, that doesn't mean we're going to have an exact repeat of last year. So remember last year, and I've talked about this multiple times, we saw interest rates dropping significantly between August 1st and the middle of September when the Fed met. But as soon as the Fed met, we ended up with A, the Fed saying, hey, we're not dropping rates as fast as we thought. And B, we had a lot more positive economic reports. And so the thing now is, what are the economic reports going to look like? The big ones are going to be inflation. The Fed still says inflation is a bigger worry than employment. But they did recognize, hey, we, for the last couple of years, have only cared about inflation, and now we're starting to care more about employment. Which, by the way, if they care about keeping people employed, they need to lower interest rates because that makes it cheaper for companies to produce things because they can borrow money to build a new plant, and they need employees to build that new plant, and they need employees to staff that new plant. So it's all related here, and the Fed it's their job, but they're tweaking the numbers to try and create a particular outcome. And right now their outcome is saying we're still more worried about inflation. So we've got to watch the inflation numbers going forward, but we've also got to watch the unemployment. Unemployment is the bigger concern. That this sounds very backwards, very perverted to say it this way, but the greater the problem of unemployment, the lower interest rates will go. Okay, so I've said this before, but I'll repeat it right now. Unemployment and a problem with unemployment, it sucks. It sucks for the economy. It sucks for the people who are impacted, the people who are not impacted. So when we talk about unemployment, right now we're at like 4.2, 4.3% of the people who want to work cannot find a job. Horrible unemployment puts us at 10, 11, 12% unemployment. That still means 88% of the people that want to work have a job. And for those 88% of the people, what they're having is a better environment when it comes to interest rates and the ability to afford a home. And so that's the direction that we're looking at, is we're looking at, hey, if unemployment continues to become a problem, the Fed has to lower interest rates. And remember, the Fed doesn't control mortgage rates, but the Fed influences the economy, and the economy determines interest rates. So it's all very, very, very interrelated. All right. So what everybody's here for is, you're like, John, where are interest rates going from here? I don't know. What I'll tell you is, if you're in the process of buying a home, you're in good shape. Like, our rates are still better than they were 3 weeks ago when we finished July. So the report in August, when we finished August, the jobs report that came out the first Friday in September caused rates to fall further. We've lost that gain, but we're still better than we were the end of August, which is better than we were at the end of July when rates started dropping. We're still in the mid sixes. I locked somebody yesterday in the mid to high fives on a 20-year fixed rate. That was really good. A 20-year fixed rate loan, I think it was 5.75 I locked them in at yesterday. So really, 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 maybe 5.6, really attractive interest rates that are still out there. 30-year fixed, I locked one person in at 6.25, another one at 6.6, depending on your credit score, depending upon the size of your down payment. There's so many factors that come into play, depending upon what you want to pay in fee, lots of factors. Okay, so be very, very careful. And it's the thing that I'm going to warn you about the most, is when you look at where interest rates are going from here, you cannot simply look at the top level answer of what's the rate. You have to dig one level deeper and say, what's the cost? Okay, it isn't just what's the rate, but what is that rate costing me? Because there's some lenders who will say, oh my gosh, I can get you still 5.99, and they can on a 30-year fix, but you're paying a bunch of money in fees to get it. A bunch of money in fees to get it. Now, maybe that's worth it, but often it's not. And most of the time, they don't even tell you. It's in the fine print. It's on the paperwork when you sign it, but especially in this digital world of DocuSign, the signing of disclosures now goes like this: click, 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 click. And it just jumps from one section to another. You guys need to read what you're docu-signing. You need to scan through it and understand it. At least back in the olden days, you'd have a piece of but at least back then, before docu-signing, you'd have a piece of paper sitting in front of you that you literally at least had to glance at. Even if you just pointed at the bottom and signed, you could see the whole thing. DocuSign, you can't even see the whole thing. You click and it goes to the next signature line. It skips right over it, and then click and it goes to the next signature line. You have to slow down. You have to figure out, what am I paying for this? You have to figure out when you're refinancing, hey, are they resetting me to a new 30-year? Is that really what I want? Now, for some of my clients, that is what they want. But for a lot of them, they have no idea. They don't realize that they just lost the 3 years that they paid in principal, and they're resetting from 27 to 30, and their lender didn't even explain it to them. So they pack a whole bunch of fees in there, which makes the rate look super low. And then they stretch you back out to 30 years, which makes the payment look like it's an even better improvement. But all you're doing is kicking the can down the road. Now, maybe that's the right thing for you to do. But for most of you, you're doing it because it's what the lender offered, and they didn't explain it. They just did it because it makes the interest rate look better. And I do not want you to fall victim to that. This is whether you're purchasing a home or whether you're refinancing a home. It is not simply about what's your rate. It is about, what am I paying to get that rate? Because I often am conservative in the numbers that I provide. And I've got somebody calling me saying, John, there's somebody else who can offer 0.5% lower than you. I'm like, that can't be true. Like, there's tolerances. That's like somebody saying you can get $1 a gallon cheaper gas at a gas station down the street. That just doesn't exist. And so when you think about those tolerances, and somebody says somebody's 0.5% cheaper than me, I say, nah, there's something going on there. And so I said, get it to me in writing. Oh, they didn't put it in writing. Well, then tell them to put it in writing. And when it's in writing, it's different. Or if they did put it in writing, oh, they're paying a whole bunch of money in fees. Or if they put it in writing, it's, oh, well, this is based on where interest rates were a week and a half ago. A week and a half ago is an eon of time when it comes to interest rates and how they're changing. And so whether you're buying a home or refinancing a home, stop paying only attention to the interest rate. Yes, that matters. Yes, that's the easiest thing for you to decipher and say, is this a better deal than the other scenario? But it isn't all that there is. You need to get a total cost analysis. What is your total cost going to be over time? Upfront costs, long-term costs. What is it that's going to make the most sense to you based on your plans in this property? And do not fall victim simply to an interest rate. Now, a couple of things I want to finish up with. First of all, for my current homeowners, did you miss the opportunity to refinance? No. Did you miss the opportunity to get the rate that we had on Tuesday? Yeah. Will that rate come back? Maybe. Say like that? No, yeah, maybe. Okay. I don't have all the answers. I know you're here because you think that I do. I know I tell you that I know everything. I tell my kids I know everything, but they're old enough now they don't believe that. But it worked for a little while when they were young. The point is, I don't know where rates are going to go. I was afraid that what happened this week was going to happen, and it did. I wish I was wrong. You can go find a video from 3 years ago where I said interest rates are going to fall in the next 12 months. That didn't happen. I've been wrong many, many times. No different than the guy that tells you to buy a particular stock. They have no idea. They're making an educated guess, and sometimes it's not even an educated guess. I am telling you right now, it is a good time to buy a home. It is a good time to refinance. Could it be better next week, next month, or next year? Yeah, it could. Could it be worse? Yeah, it could. And so it's about what are your goals? It's about what are you trying to accomplish? Why do you want to refinance? What are the circumstances and what are you trying to do? And instead of calling around and saying, what's the lowest rate? How about have a conversation about what am I trying to accomplish? And is this going to help me to accomplish my goals or not? And that's something that I can do for you and with you by clicking this QR code or scanning this QR code up here and scheduling a time to meet with me. There's no obligation. There's no cost. It's just a conversation. And I want to help guide you whether you're looking to refinance or if you're looking to purchase a home. Now, the housing market right now is in flux. I've been talking about the fact that I've been seeing prices dropping. I'm seeing sellers willing to accept low offers. I just got a text message from a listing agent this morning saying, hey, I got an offer from your buyer. The price is significantly below the list price, but they're willing to consider making it happen if, John, you can tell me we can close quickly. Speed for this seller and certainty of getting the house sold is more important than price. Well, guess what? When that seller does that and they accept that offer and that transaction closes, that becomes the baseline of the price for the next person writing an offer. That's how prices fall. We are seeing prices fall in some markets. We're seeing prices stay stable in some markets. And there's some pockets where prices are still going up because they're highly sought after neighborhoods. But generally speaking, even with interest rates being lower now than they were a few months ago, there's not enough demand from buyers. And there's a lot of sellers that are just tired of holding on and they need to sell. One buyer, a couple of buyers in particular. I got a buyer last week that got in a contract on a home that was 10% less than the list price, 10% less than the list price, and the seller accepted the offer. Okay, so you've got sellers that are just plain willing to negotiate because they need to sell, and that sets the bar for the next seller. So I don't want you concerned and saying, oh my gosh, John, is the housing market going to fall apart like it did in 2008? I keep saying this to you over and over again. No, I don't believe that's going to happen because we don't have people that are going to have to refinance because they have adjustable rate mortgages. People can afford their payments. So even if the prices come down some, that's a healthy correction. Okay, so there is a healthy correction that is happening across the board right now. Doesn't mean as a buyer you can get anything that you want, but it means that there's a lot of sellers who are willing to negotiate and there's a lot of sellers that are not. And so you have to decide, how bad do I want this house? If you want this house really badly, then you've got to say, hey, maybe I don't want to push really hard on negotiating. But if you could take it or leave it, which a couple of my clients have been in that position for the last year saying, I could take it or leave it. I'm waiting for values to drop. And now they're seeing it. And now they're writing offers. The client that I got the call on from the listing agent today, we've been talking about buying for the last 2 years. And they've simply said, I'm waiting until prices come down to a certain point. And now they're there. They're able to get that house. And so if you've been sitting on the sidelines waiting for that, or you know somebody who has, now is the time to start poking your head above ground, looking around and figuring out what's out there and what should I do. Okay. The truth is, no matter what you offer, the seller doesn't have to say yes. Now, there's a little bit of a stigma in the real estate industry about, I don't want to insult the seller. I get it. but you're in charge. And so if your buyer's agent says, oh, that's too low of an offer, we don't want to insult the seller, well, maybe that's not the right buyer's agent. Like, I understand that thinking, and I understand them pushing back and saying, hey, I don't think that's likely to get accepted. And so how badly do you want this home? But if your answer is, I don't need this home, but I'll take this home at this price, and they still refuse to write the offer saying, well, that'll make me look bad because, I have a reputation in the community, and if I write low offers, I'll look bad. Again, I understand where they're coming from, but you are their client and you're in charge. And so if you want to write that offer, then tell them, no, I want to write this offer. And if you refuse to do it, I'll find somebody who will. And I'm not challenging. I got a lot of realtors who watch me. I'm not challenging the realtors. I'm just telling the truth, which is the market is shifting in certain pockets. And you may be right as a realtor to say, look, but it's not shifting in this pocket, and you're not going to get that house accepted at this price. Well, the buyer doesn't know that until they write the offer and get the proof that the offer was not accepted. And so at a certain point, your job is to follow the instructions of your client, and your client is the buyer. And we have to understand that's our role in this process. And as a buyer, don't let the real estate agent force you to write an offer higher than what you're comfortable writing. Okay. All right, guys, that's about everything I got for today. So I have a couple dozen people that are spread across a few different platforms. So if you are watching live, feel free to post any questions you have right now. If you're watching recorded, post your questions and I'll come back later and answer them. I will simply finish out with, as I always say, I'm interviewing to be your lender. I've gotten a lot of questions recently. First of all, a lot of viewers reaching out, telling me how much they appreciate it, and a lot of questions about, hey, John, I don't know if you can help me, but I absolutely love those questions. More often than not, the answer is yes, I can. Let's set an appointment. Okay, I can't promise you that I can take care of it until I see everything. It's like you calling your doctor and saying, hey, I got this pain. Is this really going to be something that is going to be a problem? Well, based on what you're describing, no, I don't think it's a problem, but we got to run the test because I don't know. I can't give you the answers until I run the test. So I am interviewing to take great care of you, to help you, whether you're looking to purchase a home or refinance a home. Myself and my team, our operators are standing by. Okay, so I want to be here to take great care of you. Scan this QR code up above, share it with your friends and family, and I look forward to the opportunity to take great care of you. Have an absolutely wonderful weekend, everybody, and we'll talk to you soon. Bye-bye.